I've passed 47 prop firm challenges and failed many more, yet I still ended up in the green. The difference wasn't my trading skill, it was understanding that challenge accounts are very different to funded accounts. Most traders treat challenges as if it's a real, live account, taking up to 3 months to pass if they even manage to pass at all. In this video, I'm revealing it all. The rules that trip people up, how to build a challenge-specific plan, and a controversial approach that gets you passing accounts in days instead of months. You'll learn why risking more in challenge phases actually makes mathematical sense, and how to never blow a funded account once you pass. By the end, you'll have a complete blueprint on how to pass any account from any prop firm, whether that's FTMO, Top Step, 5%ers, Breakout, you name it, it works for everything. This is the exact guide that helped my students pass over $18 million in prop firm challenges. Before we dive into strategies, let me show you exactly why traders never get funded. And it's not what you think. The first thing that's most important in anything in life, guys, is a mindset. If you don't have the right mindset, things are not gonna work out as well as you would like. For example, with prop firms, if you have the mindset of, oh my God, I'm buying a $50,000 account. Oh my God, if I lose it, you know, I'm basically losing $50,000. If you have this kind of mindset, this big pressure of it's real money, you're gonna screw yourself. The only issue is that you can't do the complete opposite either, which is, yeah, whatever, I just spent 50 bucks for this challenge. I don't care, it's nothing, right? I'm just gonna blow it. Because you're gonna go into a gambling mindset or you're gonna go into a scaredy cat mindset. In other words, fear or greed. It's always fear and greed, guys, for literally everything. Fear of losing the account because it's such a big number and I've never traded with this much capital, blah, blah, blah. Or it's going to be greed and thinking, I don't care about losing this account because if I just max risk, I'm gonna pass it and make big payouts. And there's obviously issues with both of these sides. The issue with being scared to lose your account means that you could be trading the same challenge for months and months and months before inevitably blowing it up after 1,000 paper cuts, or eventually passing it, but then being so fucking scared to trade the funded account because it took you so long, so much effort to actually pass it that you end up losing the funded account because you go on tilt or you do the exact same thing and you just get a million fucking paper cuts. And then of course, if you just keep blowing accounts, well, some prop firms will just ban you because you have what they call a gambling tendency of maximum risking all the time and blowing all of their challenges, getting big payouts and then losing the funded account, which is not good because then you're just gonna lose access to some of the best prop firms. But here's the thing, prop firm challenges are not designed to actually test if you're a good trader. They're designed to make sure that you can actually follow rules while being profitable. Prop firms, they're basically like schools, okay? Schools, they just want rule followers, right? Whenever you're working at a factory, they just want you to follow rules and be a good employee. That's basically what prop firms want. They don't want to have rebellious motherfuckers which are trying out these super crazy weird strategies and bending the rules all the time and trying to like skedaddle. They're just going to ban you or deny your payouts, which is not what you want. They want you to be consistent, to be profitable, and most of all, to follow the rules. If you do this, then guess what? You are going to get funded easily, you're going to be keeping your funded accounts, you're going to be getting payouts, you're going to continue to get payouts, and on top of that, they are going to scale you up onto their scaling plan to give you even more capital, to give you even better conditions so that you get a bigger profit split, so that you potentially don't even have a maximum daily loss, so that you maybe even get a salary, you get coaching from high-level traders. There's a whole bunch of different things you can get from these different prop firms once you actually prove yourself consistently. They either want that, or the complete opposite, which is you just gambling and losing challenges and never making any money because they make a shit ton of money off of the evaluation fees anyways. Now, some of you might think that some of these rules are unfair, but I would disagree. I mean, obviously some of these things that some prop firms are doing is ridiculous, but for example, right, you have your maximum daily loss and your maximum total loss, right, maximum drawdown. I feel like these are completely fair. Maximum daily loss makes sure that you don't just full port the whole, let's say 10% maximum drawdown you have, and that you're actually able to follow daily risk management and have some fucking self-restraint, which is really important, or else you're basically just gambling and you don't have the right tendencies. A maximum overall loss means that you can actually follow boundaries, that you can actually follow a general plan and not, well, go fucking crazy and blow up an entire 100% of a 50K account, for example. So it is really important for you to be aware of that, to know, hey, I need to actually follow these boundaries. So that's number one. Now, I feel like these make sense and most of you will feel that it's agreeable, right, that these are normal rules. Now, the rule which I would disagree with is going to be trailing drawdown. A lot of these futures prop firms or one-phase challenges with some prop firms will have trailing drawdown, which means that basically instead of having a maximum loss, let's say you buy a 100K account with a 10% maximum loss, in other words, you only lose the account, right, with this specific rule when your account goes from 100K down to 90K or from 120K down to 90K. The problem with trailing drawdown is that it wouldn't even be down to 90K. It would always be moving up with you, which means if you have unrealized profit trailing drawdown, for example, like Apex Trader Funding has, I believe still has, which is ridiculous if you ask me, basically means that let's say you buy one of their 50K accounts for like $20, which there's a reason why they're that cheap, guys, where they go 90% discount all the time because they make a bunch of money off of people which keep losing the accounts over and over and over again. I've heard a lot of people in my DMs saying, hey Sab, I've passed dozens of these funded accounts at Apex, but I can never get a payout. Yeah, because it's easy to pass, but it's very hard to get a payout. They usually deny payouts anyways, even if you get there. So it's very different to pass an Apex account versus an FTMO account. Tangent over. What I'm trying to say, guys, is basically you could have a 50K account, you could be up 2% on a trade, right? So you're up $1,000. And if you close the trade break even, you actually just lost 2% of your maximum drawdown because it's trailing, which is so ridiculous when you think about it. But that is one of the things that some prop firms do. My rule of thumb is don't use a prop firm that does that. Very easy, very, very easy. Now, can it work out? Of course it can work out. If you have a strategy which has a negative risk to reward or a 1-to-1 risk to reward, the trailing drawdown thing can be fine depending on the kind of data that you have and the kind of backtesting that you've done. If you have, let's say, a higher risk to reward, let's say 3-to-1 risk to reward strategy, and quite often things go back break even, then it's not worth it at all. Don't even consider it. Use a prop firm where you don't have to do that. And once again, I'm going to go over that in just a moment. Then there's other rules, like for example, news trading. Some of them will not allow you to actually trade news. I think it's pretty obvious why they don't allow you to trade news within a few minutes, because of intense volatility. In other words, you're basically just going to be full porting, trying to pass an account or trying to get massive payouts. So it's not really trading, that's mostly just gambling. So that's why they have that rule. Some really legit prop firms will just remove the profits that you made right around news, which is really cool. And some prop firms will give you potential accounts which have less leverage, which you can actually trade anytime you want. And that's not just news, that's also holding overnight and holding over the weekend, which some prop firms like futures prop firms don't actually allow you to do, which I don't really know why, to be honest, but all I can say is that with CFD prop firms, typically you are allowed to hold overnight and over the weekend, and I would recommend getting one of those accounts because you could lose your whole account if you accidentally have your trade holding overnight or over the weekend, which is really unfortunate, in my opinion, for losing a whole funded account or whole evaluation. So that's a rule which I think makes sense, but also just be aware of it. Honestly, with most of these current prop firm rules, you just need to be aware of them and to make sure that you actually know what they are and to follow them. And then another rule which I think does make sense is a consistency rule. Now it depends how it's done. I think a lot size consistency rule is a little bit weird, depending on how it's actually done. Obviously, they don't want you to be risking like literally nothing, and the next thing you know, you're risking 100 times more. I do understand that concept, but I do think a consistency rule for profit for you to actually get a payout makes sense because they're looking for you to be consistent, for you to be consistently making profits, not getting 20 losses in a row, then a big winning trade and then getting a payout from that, because that's not consistent trading. So these are some of the main rules which just come to my mind. Obviously there's other rules, there's other things which might not be coming to my mind. The most important thing is for you guys to know how to think. My goal with my videos and with everything that I do is to teach you how to think, not what to think. In other words, I want you guys to understand if you're going to want to get funded and work with a prop firm, go to their website, look at their FAQs, go to their Discord, ask about their FAQs, ask about the rules, make sure you understand it very, very clearly, open a ticket, talk to their team, talk to the CEO, actually understand these things. And if you can do that, then just stick to that one prop firm because you'll be very aware of how it works. You can even make a little, note. You can make a Notion. You can make something with all of the main rules, all the main information, little stipulations, so that you know exactly how to actually follow the rules, so that you can always refer back to it and make sure that you can avoid situations like, for example, my buddy Dave, as you guys might have seen, he ended up getting a 200K E8 account. He passed phase 1, he passed phase 2 with a really clean equity curve, and then he was going for his payout. His payout was around like $4,000. What happened is when he requested his payout, he got it denied because he didn't actually follow one of the rules regarding news. What happened? Did they breach his account? Did they screw him over? No. What they did is they said, look, we're going to remove the profit from the one trade you took, which was during news, because we're aware that this is your first, mistake and you might not have been aware of it. So we're just going to remove that and you're going to be able to continue trading your funded account. What did Dave do? He took a couple of more trades, made sure to follow the rules, and next thing he knew, he got a $4,000 payout, which is about 5,500 Canadian, which just for context is basically his rent for like 7 months. So that is one of the best ways to actually go about prop firm trading, is making sure that you go with the best prop firms, that you follow the rules, and that you're just honest, because sometimes they're going to also be aware, hey, look, maybe you just made an honest mistake. I'm not going to screw you over. I'm just going to deny this payout. You can try again. And if you follow everything, then I'll give you the payout. Honestly, if you follow the rules, usually they're just going to pay you out anyway. So Anyways, tangent over. Oh, and then also minimum trading days, final little thing that come to my mind. Why do they have minimum trading days, like let's say 3 days or 5 days for you to pass phase 1 or phase 2 and get funded? Because they don't want you to basically just make all the profits in one day, just like full port. They want to see consistency, right? Same sort of idea. But a lot of these, you know, like FTMO, for example, it's 5 minimum trading days, but there is no minimum profit per day. So you can make all the profits day 1, then make just like $10 day 2, 3, 4, 5, and then they're going to pass your account. I've tested this myself. But there are some prop firms like I think Blue Guardian Aquafunded, which do actually require 1.5% profit per day or something like that, so that they make sure that you're actually consistently getting profits every single day, which that can be annoying. I don't really like that rule very much when they go that deep, but I do understand why. Once you understand the game, you need a strategy that's specifically designed for passing accounts, not just profitable trading. There's always going to be the conservative, real money kind of way of going about the challenge. For example, that's what Dave did with his E8 account. He was risking just 0.5%, sometimes 1% per trade, and he had about 20 trades before he passed phase 1. So it took him about a month or so to do that, and it was a very, very, very smooth equity curve with very little drawdowns. Anytime he had a loss, he would have recovered very quickly because of his positive risk to reward. And then phase 2 is the same idea. He ended up getting a couple of losses, but because it was low risk, it was fine. And then he ended up passing phase 2 about 2 weeks later, and now he's able to get payouts from that account. That is the more conservative way to go about it, which is going to be lower risk, basically just playing it slowly, making sure that you actually get to your goal based off your data, which once again, if you haven't seen my backtesting video, which is a banger in my opinion. I mean, this is a great video which goes over how to actually backtest, gather your data, and then the video after that, how to turn backtesting into profits. It's all on my YouTube, you guys can find it. I do explain this in depth to actually understand how to actually gather your data, hundreds of trades to prove your profitability, and then to utilize this data to then basically reverse engineer and forward test, hey, how long is it going to take for me to pass my challenge? How long is it going to take for me to get this much in payouts and to get to my goals? I went over all of that in those videos, so definitely watch that, as this is going to make a lot more sense. But the main thing is also, if you have your data and you know that you can on average get multiple winners in a row, then you can just basically risk more than you would normally. Instead of 0.5% and 1%, you could risk 2, 3, maybe even 4%. So long as you're able to follow the rules of the prop firm, so long as they don't have a rule of maximum risk per trade, maximum risk per day, you know, some sort of like lot size, maximum lot size rule or something like that, then you'll be fine. Some of these prop firms don't like these kinds of tendencies, but so long as you're not abusing it and doing the same thing in the live account, usually it's going to be fine, right? Usually, because they don't really care about challenges as much as they care about you being consistent on the actual funded challenge. It does depend on the prop firm, like Breakout. They do actually ask you to be trading the same way on the evaluation as you would on the actual funded account. But I don't know how much they really enforce that rule, to be honest, because they've never denied payouts. My main point here, guys, is, you know, the kind of mindset that you need to have is the challenge cost is your risk. Your reward are the payouts. So let's say you spent $1,000 to get a $200,000 account with FTMO, okay? Or let's say E8 Markets or something like that, right? One of these prop firms. And that is what you're actually paying to get access to the account. If you were to lose, let's say, 4 of these accounts, and then you buy a 5th one, you pass it and you get a 5% payout. You've spent $5,000 and you've made 5% on a 200K account. Let's say you have a 90% profit split. You're going to be keeping 5% of 200K, that's 10K, 90%, 9K. Spend 5K to make 9K. That's around a 2 risk to reward. The thing is, your risk of the 5K is forever fixed. It will never go up with the accounts that you have at the moment, right? With the one account that you have passed. But the reward is infinite. You can keep getting more and more payouts. So your first payout in this case was 5%. You made 9 grand. Very good. What happens if you get another 5%? Your risk is still 5K, but now you've made 18K total. So now your risk to reward just doubled in a sense, right? In terms of how much you've risked to get your accounts, to get them passed, and how much you're actually making from the payouts. So that's the kind of risk to reward mindset you need to have, and reverse engineer from there, figuring out, hey, what kind of data do I have? How long do I really want to take to pass the account? Because look, if it takes you 2 months to pass an account compared to, let's say, just 2 weeks, we're talking about, you know, a month and 2 weeks, which is going to be, what is that? You know, 6 weeks, which is going to be potentially 3 payout periods. If your payouts are every 2 weeks, that's 3 payout periods, which you could be making even just 2% per period. If that's a 200K account, 2% is going to be 4K. 4K times 3 is 12K. If you're keeping, let's say 90, 80%, something like that, let's say you're keeping 10K. You're talking about 10K, 10,000 USD in your pocket, which you could have if you were to basically just be blowing the account, trying to pass with higher risk, cycling through multiple, because you're going to be passing faster, right, with higher risk. And then you're going to be able to get real payouts. So what's better? You only spend 1,000 and you take 2 months trying to pass, and maybe you don't even pass because of all the pressure, or you spend a couple $1,000s, you end up actually passing, you get the reps in, you get less scared of placing these trades because you've actually done the reps and your psychology starts to improve because of that. And then you actually start to make real money, which recoups what you actually already invested and gets you profit. Just think about it that way. And if you want personalized help building your challenge passing strategy, you can book a call with me. We also have a totally free course that goes deeper into prop firm psychology and rules. Both links are down in the description, but stick around because I'm going to show you the exact mathematical approach that gets traders funded fast. Now let me show you how to build a trading plan that's optimized for passing accounts, not just making money. There is a huge difference. You need to reverse engineer from the rules and the kinds of targets that you have. Let's say you have a 10% profit goal. You need to work backwards to daily targets. How much are you actually going to be making on a daily and a weekly basis to actually be able to pass your account and get to that number? Look back at your back tested data. Like I said, watch the YouTube video if you haven't really back tested yet, you don't already have that, or it doesn't make complete sense yet. Look back at your data and then you can reverse engineer from there. Let's say that with your data, you're making about, I don't know, if you're doing like, let's say 5 R per week on average, you have 2 R per trade, minus 1 R per loss, of course. Then you could maybe have average weeks of Monday and Tuesday plus 2 R plus 2 R, Wednesday minus 1 R, Thursday plus 2 R, Friday minus 1 R. It could be something along those lines, which in the end might equal to around 50% win rate. That's going to be, what is that, 3 winners and 2 losses? Yeah, it's gonna be 3 winners and 2 losses. So it's gonna give you a positive win rate, which is very good. So you're going to have plus 6 R minus 2 R. So you're gonna have plus 4 R basically per week. What's cool is if you have the 2 winners, 1 loser, and then a winner, if you have this kind of sequence, you're able to risk significantly more. So let's say you need to make 10% and you have a 5% maximum daily drawdown. Then all you really need to do is just figure out how much you can actually risk as a maximum so that you can pass your account really fast while not blowing it with 1 trade. You can blow it with like 2, maybe 3 trades. So let's say 10% maximum loss, you could risk 3.33% per trade, which means you would take 3 losing trades in a row to lose your account, and it's maximum 1 trade per day, or else you would hit your maximum daily loss of 5% if you got 2 losers in a row in 1 day. So if you were to get 3.33% risk per trade, and you were to get a 2 risk to reward, then you'd be making about, I don't know, like 6-7%. If you were to get 2 winners in a row, then guess what? You would be passing your account by Tuesday. Monday and Tuesday, boom, you just made 10%. Then Wednesday, you would be taking a loss. And then Thursday, you'd be getting a win. And then you'd be getting a loss on Friday. But then the next Monday, you get a win. And that would be enough for you to actually pass phase 2, which is half of the amount of profits you need to make. And just like that, in a week, basically in 1 day, like 6 trading days, you manage to pass phase 1 and phase 2 based off of data with technically low risk because you would need to get 3 losing trades in a row. And if you have a positive win rate, it's more likely for you to get 3 winners than 3 losers in a row. Worst case, you lose the account and then you just buy another one. Most likely you'll pass it and then you're going to be funded, and then you lower your risk so that you don't blow it. Because once again, the most important thing is for you to get funded. Once you're funded, you need to keep your risk super low. Even with 0.5% risk per trade, let's say you're making even just 10 R per month, that's going to be 5% per month. 5% on 200K is 10K. You spent just 1K for the account. The math adds up. It's not worth you risking 1, 2, 3% on the funded account and trying to go for a fat payout. Go for small, consistent payouts. Get an ROI on what you've spent and start to make profits so that you can scale up to other prop firms. Then again, like I said, passing is only step 1. The real money comes from keeping your funded account. Here's how to never blow it. Like I said, you go from higher risk, let's say 2, 3%, all the way down to 0.5%. Because you need to make sure that if you get a couple losing trades in a row, you can make it up very quickly based off of your win rate and based off of your risk to reward ratio. And the most important thing outside of this is dynamic risk management. Because, come here guys, come here. What happens if you have a 10% maximum loss, okay? And you go on tilt and you're risking 1% per trade. You could very easily lose 10 trades in a row, even just in a day. I've seen a lot of people do this, all right? Or even just risk more. If you have dynamic risk management, in other words, you go from 1% risk and then you cut it down to 0.5%, then 0.25%, and you just stay there. With 0.25% risk and 10% maximum drawdown, you need 40 losing trades in a row to lose your account. What are the odds of you getting 40 losing trades in a row? I'll wait. It's basically 0%. You could even cut it down to 0.125%, cut it down by half again. Now, how you do this totally depends off of your data, but here's a very simple framework. Let's say you start off your account with 0.5% risk. You get 2 losing trades in a row. In other words, now you're down 1%. Now, you've gone 2 losers, you're down 1%, you cut your risk to 0.25%. You get 2 more losses, in other words, you have 4 losers in a row. Now you're down 1.5%. 4 losers in a row, only down 1.5%. It's a lot better than minus 4% if you started with 1% risk. And then if you were to get another 2 losing trades in a row, then you're at 6 losing trades in a row. Honestly, at this point, you should probably recover everything. And even if you were to stay at 0.25%, you probably wouldn't lose anything more. But if you want, you could cut your risk one more time. But how do I actually go back to regular risk? Well, let's say that you had 2 losers and you went from, 0.5% to 0.25%. Right? At this point, what's going to happen is you need to recover what you've just lost. So your account was at, regular 0%. You had 2 losing trades. In other words, now you're down 1%. If you were risking now 0.25% and you have a 2 risk to reward, you'd be making 0.5% with this win. So now you have 1 win and now you're only down 0.5%. At this point, you're going to be raising your risk to 0.5%. And now if you risk 0.5% and you get a 2 risk to reward, you'd be making 1%. Which means now you'd be positive 0.5%. What happens over here if you go from, once again, 0% down, you lose 2 trades at 0.5% risk per trade, you now are down 1%. You take a win, right? Now you are only down 0.5% because you risked 0.25%, 2 risk reward, you were up 0.5% from this trade. What happens now if you risk 0.5% and you end up getting a loss? You just go back 1 level. It's kind of like levels, guys, right? So you're just going up or down 1 level. What's cool is with the positive risk to reward, you start to jump forward. What you do to actually go up to 1% risk, if you want to do this, is either over a month or 2 months of you actually trading your funded account, getting payouts and getting more consistent, you can just, instead of starting with 0.5%, you start with 1% and then you just do your dynamic risk management or not. Once again, it's totally up to you, but this really helps with psychology. Main reason why, because you might stop taking trades if you just got 5 losing trades in a row and you're down 5% on your account because you're like, holy shit, I'm down half of my drawdown. I'm scared of taking more losses. I don't know if I should be holding this trade for longer. Let me just close it out for 2R really quickly when I'm supposed to hold it for 4R, for example, and then you just screwed yourself badly. So dynamic risk management will help you follow your plan as well. It's not just about the raw numbers and theory, it's also about practice. So how do you actually scale up your risk? You could also do dynamic positive risk management or scaling risk management, whatever you want to call it. So basically same thing. You start off, you get a win. You're risking 0.5%, you make 1%. Now you risk 1%. If you lose the trade, you're back to the start. Not a big deal. You're back to 0.5%. If you win the trade, now you're 1% risk, right? You've made 1%, and now you just made 2 more percent. So now you've made 3%. From 2 trades, you're now up 3%. On a 200K account, that's $6,000 profit. With 2 winners, that's it, you're good. You already have everything you need for a payout. So you're super controlled to the downside, and you're getting what you need to the upside. And if you want, you can keep going. And if you get another win, now you're up 5%, and boom, that's a nice banger 5% payout. In other words, 10K before the profit split. So that's my best advice, honestly, for you guys, whenever it comes down to risk management for passing the accounts and then actually for keeping your accounts, making sure you never lose it and start to get payouts consistently. And like I said earlier, this works for every prop firm. You just need to reverse engineer based off the rules. For Breakout, it'll be a little bit different than FTMO, and then FTMO will be a little bit different than Top Step, but it's all gonna be very similar numbers. They're all gonna have a maximum daily loss or something similar, a maximum overall loss, some sort of rules for you to be following, profit goals, and then different rules for your payouts. Look at those and reverse engineer from there. Now, before we wrap up, let me just address the elephant in the room. What if I just keep failing? There is a point where you need to stop and reassess. You don't want to just lose 10 challenges in a row and there goes like all of your savings. You need to make sure that you're smart. First, you need to set a budget for yourself, which ideally should be over 5 to 10 evals. So let's say you have $1,000 that you want to be putting towards this, and it's going to cost you $100 per, let's say, 10K account. Well, you're going to have 10 accounts that you can lose before you're basically out of your budget. But before you even start to blow these accounts and just lose your money, you need to make sure that you first actually back test it properly. Like I said, watch the video if you haven't already, but make sure you back test properly. Make sure you actually demo trade to make sure you can execute in real time. And then 3, make sure you do a demo prop firm challenge. So either with an actual prop firm like FTMO has one, which is great, the best option in my opinion. They now, like I said, offer US clients, so everybody can do this for the most part, unless you're from North Korea. Shout out to Ching Chong. I'm kidding. Anyways, so what I recommend is that you basically just go to TradingView, you open up a peer-to-peer trading account, you set up the commissions, the spreads and stuff like that, the balance, and then you basically follow the rules of a prop firm that you're looking to buy challenges with, and you just pretend to basically be taking your trades and looking to pass the demo challenge, right? Phase 1, phase 2, and then get payouts. If you can do it in demo, the probability of you blowing up a shit ton of accounts is a lot lower. You might even be able to pass your first real account, or maybe you pass your second or third instead of it taking multiple more. So realistically, this is not something that should happen if you do the steps properly. If you just jump straight to buying an account, you will lose a bunch of money because you are gambling. So please, please, please don't do that. I am giving you fucking pure gold right now. If you just follow the steps I'm giving you, I can guarantee you'll be profitable. Well, you now have everything you need to pass any prop firm challenge you want. Here is your step-by-step action plan over the next 30 days. The first thing you need to do, week 1, is make sure that you actually have a really solid back test. So if you haven't done any of this yet, then make sure that you actually start to study some concepts, that you make sure that you actually understand how the charts work, how trading works, all the basic stuff, which I covered in my free course, by the way, link in the description. So once you have that covered in week 1, then week 2, you can backtest properly, gather a shit ton of data, improve. Week 3, all you need to do realistically is just continue doing what you were doing previously and then start to demo trade the markets. You can actually do the demo challenge if you've already started to place some demo trades in the markets. If you've already done a lot of this previously, then you can skip a lot of this and then just start to actually do the demo challenge and then start to buy your accounts and then just repeat until you get payouts and then use the payouts to scale up the bigger accounts. I digress. So yeah, week 3, basically you just want to make sure that you can actually pass the demo challenge. And then week 4, this is when you actually buy real accounts and you start to pass them and then get payouts. It's really that simple, guys. You just need to follow a step-by-step plan. And of course, my friends, make sure you have a plan, reverse engineer, set up a budget, set up timing, make sure you have data. Without that, you're not gonna get very far. There you have it, my friends. This is the complete blueprint to passing any prop firm challenge and turning it into consistent monthly payouts. You now understand the rules, the math, and most importantly, the mindset it takes to pass these accounts and keep them. Now watch this video next where I talk about how to turn prop firms into your personal ATM without burning a shit ton of accounts. Click the video on screen now and let's get you not just funded, but profitable for life.